before we bring on our special guest of the day. There is a headline here in Benzinga Pro. Elon Musk gives fresh timeline for FSD access on Cybertruck, says it should be coming out in August. Now, we just talked about the timelines. If I were a betting man, which I am, I'd say that ain't happening in August, but we'll see. Maybe he'll prove me wrong there. But let's go ahead and bring our special guest on of the day, Mish Schneider from MarketGauge. Without further ado, let's give Mish our special pre-market prep. Welcome. All right, Mish Schneider, welcome back to pre-market prep. How are you doing this morning?
I'm doing well. It's certainly been an interesting summer so far, right? Lots of news and markets, the great rotation to my economic modern family. So yeah,
you're probably enjoying the last couple of weeks, Mish. You know, my long-term portfolio actually enjoying it a little bit too, because I've had all these value dogs like Bristol Myers and all these value dogs. It's an IWM. I've owned IWM. You listen to the show, I've had the small caps, they've underperformed. I've had them in there for like the last 10 years. My long-term portfolio is like, man, I'm like, these stocks just suck. Well, all of a sudden, Mish, they don't suck that much, and they're doing a little bit better here. So the rotation actually has helped me to a certain extent here. Talk about the stocks that have helped you. Obviously you're enjoying this, but does it continue? That's the big question. Does this continue, or is it just another value blip and we had the couple week run and then they eventually just come back into the NVIDIAs and they forget about, all of our IWM and Bristol Myers? What are your thoughts here?
Well, my first question is, where's Joel?
He is off today. Joel,
he had a big,
and you never, she misses Joel. We miss Joel too.
Well, yeah, I've never done the show without him, so it was kind of like, I'm not that I don't love you guys, but I was just curious. All right. Well, anyway, first of all, I say the economic modern family, and people think that it's kind of a funny thing, but the truth of the matter is that it was created because of the U.S. centricness, if that's a word, of that family, in that we have the small caps as granddad, right? Those companies in the United States. This really kind of represents not only anticipation of interest rates may be going lower, and certainly everybody's felt that they've peaked out, but also a reshoring. The small and mid cap stocks have done much better in the last couple of weeks. That's healthy. Even though our debt came out at 35 trillion, yay, we keep going up. That's a concern, but let's put that on the shelf for a second. Then we go to retail. Now, retail is obviously the consumer, 70% GDP, but XRT has been hanging in there. So that would be a really key area to watch. Now, I think that if we can get through, and if we're looking at XRT, and the reason why I picked that one, by the way, is because it's a nice combination of staples and discretionary. And if that starts to join in the party, I think that no matter what anybody says, we're still looking. We had GDP come out. People say, oh, well, those numbers are always shifted. But it could be that we've actually gotten this sort of soft landing thing coming. But we have to watch that, because if that rolls over, I would get a little bit more suspicious that we just rallied into major resistance. KRE, I mean, you want to talk about...
Oh, wow.
Right. So that's the regional banks, and that sat in a range ever since the big March crash last year, between 45 and 50 for like months and months and months and months.
Yep.
And now all of a sudden has gotten through 50. But caveat again, 60-61 was where it started to break down from last March. And we are right there. If we can get through it, again, great sign. If we can't, maybe we just saw a nice pop into these major resistance. And then I think that there's IBB, which is my biotech sector. That also has done pretty well. Again, a lot of resistance, but a lot of those biotech names looking pretty good.
Yeah.
And then IYT, of course, transportation also hasn't really participated. Now, we had those dismal earnings by UPS, and then we had obviously the CrowdStrike affecting the airlines. And so that's another one that has to be given a chance to participate. And then if that does, I think in terms of the U.S.-centric areas, we have to say we're in better shape than what we think. And people aren't as concerned with the debt as the headlines like you to believe. So that's the plus side. Now, the one member of the family, well, actually two that I left out, was semiconductors. And so the question is, does the semiconductor area have to participate as much as everything else? Well, it already has sort of done its job in essence, right? Getting us to this point where there's been so much money flow into AI, and a lot of these other smaller mid-cap companies are starting to talk more AI. So it's possible that the job that it needed to do, which is bring everybody into further 21st century, it's doing it, and it doesn't necessarily have to have a lot more upside in order for these other areas to shine. So that's the good news. The bad news is that I'm watching the long bonds, and there's a double-edged sword, right? With the double-edged sword, of course, is everybody wants lower interest rates, lower interest rates, lower interest rates. Well, we want lower interest rates to a degree, but what we don't want is long bonds starting to shine and looking more like a flight to safety, because people are starting to fear that the cracks under the surface are more recessionary. So that's kind of where we're at right here.
Yeah, that's a fine line, to understand why the TLT rallies, because there was a couple days, in the last month where you're seeing the TLT rally and obviously the S&P, maybe even the IWM not participating. It's like, well, there's a little bit more fear here. At a certain point in time, you can get where, we've been, in the last couple of years looking at this market and saying, oh, the TLT and I'm saying the IWM are linked at the hip and they move together. And it's true. But at a certain point in time, they separate, and that's during economic downturns where people fly to safety of long bonds and they don't fly into stocks. So it's a fine line to say, oh, well, the IWM or TLT is rallying today, so all stocks should be higher. But you got to kind of understand the reasons for it rallying here as well. So that's the one thing to consider. Where do you see rates going? Do you think we are going lower in September? It seems like everybody thinks we're going lower in September. And is there, are we doing one cut or two cuts, or is this going to be now a path to start cutting rates, gradually here for the next course of the next year or two?
Well, I don't think that the Fed will be as aggressive as the market would like to hope, or like I said, maybe sort of false hope. It should be. I'm kind of using, I think the clearest thing to me would be like, where would the mortgage rates be that would at least help people feel better about refinancing or maybe getting into a home that they've been sitting on the sidelines because the rates have been so high. And that would be probably closer to 5%. I don't think we're going to go below 5% in terms of interest rates for mortgages. And I like that. That's a good benchmark. So that gives us some room without under 5%. Now we have to say, ooh, what's going on? That would be scary. So that's why I'm not so sure I'm going to say, oh, TLTs are going up. This means recession and everything's going to break. What I'm saying is that we have room to ease up a little bit, which would be healthy until a point where it's not. So let's discuss the things that would be of concern, right? We still have those concerns. The debt, obviously, we just mentioned being number one, but yet we need the interest rates lower because the government can't afford to pay back the debt at these very high interest rates. So that could be a tinderbox. Geopolitics. Things have not really cooled down that much. There was a lot of headlines coming out of the Middle East and Israel this weekend. We don't know where that goes still. And I think that has to be watched as well. As far as I know, the Russia-Ukraine situation, it's kind of like back burner, but it's always there. So I think that has to be watched. And then, we are going into a tumultuous, at least that's what the forecasts are, weather season. Even though we started out, everybody said, oh, hurricanes are going to get out of control. We haven't really seen that yet, but I've spoken to some people who are sailors, actually, and they have all docked their boats because they're anticipating that could be really, really bad. So, these are all factors that are things to be watched. But the good news is that the metals are hanging in there, but they haven't rallied anymore. I mean, gold's kind of found its way between 2350, 2450. It does that. It consolidates. So we have to watch that. Silver actually came off a lot. It's underperforming gold right here. So less inflation fears. Obviously, we can see food prices have come off a little bit. So, we're not saying inflation's dead completely, but this is a nice little time right here in the summer to say, okay, we've got to pass. We don't really need anything more in terms of good news. What we need to have is a lack of bad news. And the earnings coming up will also be very key because these are
So
big
important.
companies. Yeah, these are huge companies coming out. Like Microsoft, I'm all about Microsoft right now because
Yeah.
I've been like this big fan of Copilot. And I think obviously they were involved with the CrowdStrike thing, but the earnings are coming out. I'd love to be adding to that position, but I'm going to wait for earnings at this point and see what happens.
I mean, it's such a big earnings week here with Microsoft on Tuesday, AMD on Tuesday. Wednesday gives us Meta and Qualcomm, and then Thursday, Apple, Amazon, and Intel. I mean, this is the heartbeat of the S&P 500 reporting this week. So making a technical call on a Monday before we get these earnings reports tomorrow starting is a really difficult task. So like, do you think you just go in here and maybe just stay away from stocks until we get these earnings reports here to give us more clarity on, whether, there's a slowdown in big tech or not, or whether, everybody's just flying in AI and we've got to jump back into these things? Or do you take a shot? What are your thoughts are going into a report like Microsoft?
Well, I can tell you that from our standpoint, from the quant side, we have gotten out of a lot of the semiconductor stocks. And we've rolled a lot into the small and the mid cap stocks, especially the high earnings growth ones.
Yeah.
And that's the nature of the quants. They're always moving in and out unless we get into a big downturn, then they go more to cash. So right now, that's what they're reflecting. From the discretionary side, which is moi, I've actually taken it a bit easy. I mean, partly because it's summer and it's a good time to take it a little bit easy. But you know what, let's talk about ARK for a second.
Sure.
Yeah, because I have watched ARK for, obviously, like everyone has, years. And I have been, probably one of the people on the media who has said, seriously, Kathy, have you ever learned anything about money management? but right now, and of course, the real skeptical side of it is that her big losses really help with taxes.
Oh gosh, that's what she was trying to sell us on anyways.
Yeah. I mean, really, wow. But the truth of the matter is, I looked at her portfolio in the last couple of weeks, and I kind of like it. So, yeah, she has Roblox. That reports this week, by the way. She has Roku. She had Spotify. She has Coin. She has Hood. She has Tesla. Dennis, your baby, I heard you talking about.
Yeah.
And CRISPR, another one in there. And
she's got some stocks that are perking up.
I like those stocks. So I thought to myself, well, maybe it's time to buy ARK. So I did. So that's,
oh, wow.
Yeah, I'm in ARK. I don't have a huge position, but I will add. One is because it just sort of really appeals to my contrarian nature. Contrarian nature, I always like to say that I don't just become a contrarian for the sake of being it. I look for the fundamental shift to why something that has been out of favor could go into favor. That's been my sort of signature trade. So I like that. So that's number one. ARK is somewhere where I would consider adding. The long bonds, I'm also already in a place that especially if it gets to like 94.50, 95, we're looking at TLTs, I would consider adding. Whether they're going to go up as a flight to safety or they're going to go up just because the interest rates are going to come down a little bit. And that's been something, again, like KRE has been sitting there for a long time between, let's say, 88 and 95 and gets out of a range. And I wanted to know, Dennis, in particular, what you thought of Rivian, because I've been watching that very carefully. I have not jumped in yet, but
I kind of like it.
Do you?
I kind of like it. I've called Rivian the number 2 because you got everybody backing off in EVs. You've got and they're going hybrids, they're doing other things. Obviously, Ford's EVs just been an absolute disaster. And then you have Rivian, and it's like, is there a place for them to actually be the pure play EV makers? Probably number 2. So, I mean, and the valuations come down so much, from where it was $120 to $150 share made no sense whatsoever. But at a certain point in time, you're looking, well, the story's kind of turning. You're getting some, investment dollars coming in there now. I don't mind the Rivian story here. And the trucks are awesome looking. I love the look of the vehicle. Well, so whether, it catches on enough, they're so expensive, it's probably lower interest rates are going to help them for sure. Because, there's an expensive truck to try to finance, but get rates down, the financing on that gets cheaper. But I could get talking this movie. I don't have a position right now, but talk me into it.
Well, okay, so you've already mentioned a couple of things. One is, I live in Santa Fe, New Mexico. There are a million Teslas here, but I'm starting to see more Rivians on the road. And interestingly enough, my 91-year-old mother said to me last week, I think we should buy Rivian. And that's interesting because she's looking at it from a completely different, she's not a student of the markets. She just gets her senses about things like, 10 years ago, she told me to buy NVIDIA at $9. Okay. So,
Gosh,
yeah,
really?
her.
Yeah. Mom's the bomb. So that's in my head. But also, right, number two companies, as you just said, and they may learn from the mistakes that Tesla has made. And even though Tesla, I think, is, a huge company because it's way more than just a car company.
Sure.
I'm looking for Rivian right here too. It's been sort of consolidating. I'd like to see it maybe get back through when it's close, $16.90, $17. And then, if you want to sit with it for a while as a long-term position, that may not be so bad. So I'm looking at those things. I love cryptocurrencies, Bitcoin being my last member of my family. Blockchain is where I like as a very long-term play. And that too has been going between 36 and 41 just to kind of even it out. I think that's something to keep an eye on. And Dennis, I have not lost my vanity trade. I just think we're early. But some of those stocks, besides the obvious Eli Lilly and some of those ETFs like OZEM, the ones that are more geared towards the diet drugs, I think that trickle effect into, AbbVie made a huge move last week.
It did.
Great earnings. That's one of my prime companies to benefit there. Because that Allergen is part of them, and that's cosmetic surgery. I think as you start to look at makeup and fashion and, self-improvement as more and more mainstream. And by the way, Pfizer reports this week that's also trying to get into.
It's starting to perk up as well. Pfizer reports Tuesday morning.
Right. I have a position there. So I guess to sum up, really, I'm light, but I have these areas that I don't mind building. And then if I wait just a little bit longer, it'll be obvious that it's time to start having a bigger portfolio from the discretion point of view. And for right now, since we're right into this resistance, and semis, if they break down from here, will definitely add pressure to the market. I don't mind being a little patient.
Well, there you have it. Mish Schneider again joining us from Market Gauge. Always great to have you on, Mish. Some great calls there. We discussed a bunch of different stocks in different sectors, from regional banks to ARKK to Rivian. So great conversation today. Always a pleasure to have you on. Hope you enjoyed the rest of your Monday, and we'll have to bring you on again soon.
Thank you so much, Aaron. And thank you so much, Dennis. I'll see you again.
Thanks, Mish.
All right, bye.
All right, guys. Again, that was Mish Schneider from Market Gauge. Always great to catch up with Mish. Some great calls there. And how about the call from her mother to buy NVIDIA at $9 a share? We might.
Now that's a call right there. That's what we needed 10 years ago. We were starting the show 10 years ago, buying NVIDIA at $9. I could have been retired from this show like Joel.
We need to we need to bring Mish's mother on next time and get her updated picks outside of Rivian.